Markets head into the North American session with a mild pro-risk tone as a softer dollar and modestly firmer U.S. equity futures reflect some stabilization in sentiment, even as markets remain highly event-driven. In FX, broad dollar pressure has been driven more by positioning and caution ahead of upcoming policy risk than any single catalyst, while the euro has shown resilience despite softer German consumer confidence, suggesting markets are looking through weak survey data and instead focusing on broader eurozone stabilization and a less dovish ECB trajectory. The yen has been supported by ongoing Bank of Japan normalization expectations and haven demand dynamics, while commodity currencies have benefited from the softer dollar backdrop and steady risk appetite. Across macro markets, geopolitics remain in focus, particularly around Middle East tensions and the inflation implications of elevated energy prices, though for now, those concerns are acting more as a macro risk premium than triggering outright defensive positioning. Equity sentiment has been supported by some relief that growth concerns have not materially worsened, while rates markets continue to balance sticky inflation risks against expectations central banks are nearing policy inflection points. Commodities remain a key transmission channel, with oil supported by supply risk and gold underpinned by a softer dollar and lingering geopolitical uncertainty. From a policy perspective, central bank risk remains an important anchor, with markets continuing to calibrate Fed expectations against incoming U.S. data, while also watching for any signals from global policymakers that higher energy prices could alter inflation assumptions. Into the North American session, the key focus will remain geopolitics and any spillover into oil and broader risk sentiment, especially with the calendar looking so light. That's all for now.